When the refreshing taste of Pepsi comes to mind, you instantly associate it with the iconic fizz. However, the true credit for Pepsi's ubiquitous presence in Indian households goes not just to the beverage itself, but to its decades long strategic partnership with its bottling and distribution powerhouse, Varun Beverages. It is this unsung partner's robust network and operational prowess that ensures every chilled bottle reaches even the remotest corners of India, making the fizz a reality for millions. This symbiotic relationship with Varun Beverages has allowed PepsiCo to expand its reach significantly without the asset heavy option of capex for bottling operations across a vast and diverse country like India. Varun Beverages has a long standing association with PepsiCo spanning over 3 decades and is PepsiCo's second largest franchisee globally outside the US. Varun Beverages' financial strength has been critical in funding the continuous expansion of its manufacturing capabilities and distribution infrastructure, enabling it to acquire new territories and invest in the necessary cooling equipment, which is visi-coolers, for retail outlets, especially in the under-penetrated rural and semi-urban areas. Varun Beverages' operational footprint spans across 27 states and 7 union territories in India, accounting for over 90% of PepsiCo's India beverage sales volume. This vast network, comprising owned depots, a large fleet of vehicles, and wide array of primary distributors, ensures that PepsiCo's diverse portfolio of carbonated soft drinks, non-carbonated beverages, and packaged water reaches millions of retail outlets, from large modern trade supermarkets to small kirana stores in remote villages. The company's strategic focus on increasing direct distribution reach, reportedly growing to 3.3 million retail outlets, has been pivotal in embedding PepsiCo's products deeper into the Indian consumer landscape. Furthermore, Varun Beverages' strong balance sheet has allowed it to pursue an aggressive inorganic growth strategy, which has consistently acquired new territories and bottling plants from PepsiCo India over the years. So, this consolidation has been a masterclass in filling voids left by the multinational, significantly boosting Varun Beverages' domestic presence and operational scale. Varun Beverages has the bottling appointment and trademark license agreement for India with PepsiCo till April 30, 2039. VBL also pays a nominal amount in royalties, less than 1% of profits, to PepsiCo India. However, its future trajectory will not be without challenges. While VBL has a strong track record of acquisitions, integrating new territories and operations will be challenging. It may be time consuming to stabilize and achieve target operating margins compared to the existing business. This requires significant management focus and financial investment. But the bigger challenge comes from PepsiCo's biggest challenger worldwide, Coca-Cola. Coca-Cola is considering taking its Indian bottling unit public. Coca-Cola has plans to list the shares of Hindustan Coca-Cola Beverages at a valuation of about $1 billion. Though India is one of Coca-Cola's biggest markets, it has been facing increased competition in recent years, especially from Campa-Cola, owned by Reliance Group. The latter is quickly gaining market share, with 200 milliliter bottles priced as low as 10 rupees. Coca-Cola's Indian bottler serves over 2 million retailers and employs more than 5,200 people. The company operates 14 manufacturing plants across 12 states and 236 districts in southern and western India. Coca-Cola also recently sold a minority stake in Hindustan Coca-Cola Holdings to Jubilant Bhartiya Group, a local diversified conglomerate. So, the stock of Varun Beverages has traded at an average earnings multiple of nearly 60 times over the past decade. However, the company has started feeling the pressure of competition over the past few years. VBL could continue growing at moderate rates while keeping the balance sheet intact. However, for investors, the question is whether to bet on a seasoned player at premium valuations or bet on the competitor to fetch listing gains and long-term gains. So, can the Pepsi versus Coke battle downgrade Varun Beverages valuations? I had posed this question in a video about a year ago, in 2024. Since then, the stock of Varun Beverages has already corrected by over 25%. Despite a good balance sheet and reasonable growth, the stock of VBL will find it challenging to retain both market share and premium valuations. The IPO of Hindustan Coca-Cola may see a lot of interest given the duopolistic nature of the beverage bottling sector so far. However, investors would do well to think before paying premium valuations in a hurry before the price wars in the stock market settle in. Hope you like this video. Thanks for watching.